Hey, how are you doing, Robin?
Pretty good. How about you?
Doing pretty well.
Doing well. Here, I just found another Bitmoji I made of you. This is going to be on the beginning of this podcast, but I'm going with this one because this one seems to work perfectly.
That's great. Yeah.
You know, so I think this is a great lead-in. So we want to know, can you share with our viewers and listeners, what do you do? How you got into crypto? What do you do for folks? What has you saying you're welcome?
Yeah, so basically I joined the crypto space around 3 years ago. So I was looking into Bitcoin and was looking at ways to actually invest my money as well. Then I found Ethereum. I read up on it and I was directly hooked. So that's how I started getting into the space. And then a short time afterwards, the DAO hack happened, right? So that was directly a hard time for me. But I was directly from the start, I was paying attention to ICOs and other alternative projects as well, like following the ICO of Digix, for example. And that's what I focused on later as well. So started getting more into the research of ICOs, into how to structure them properly and what works and what doesn't kind of. And then I also use that knowledge for basically taking better investments decision, but also for consultancy recently.
So you would call those like fundamentals, like you research the fundamentals of a project, and you can either advise an investor about it, or do you work with projects that are sort of establishing, you know, those fundamentals and which directions to go in with their?
Yeah, exactly. I work with projects, and I think it's really important to have these. I wouldn't necessarily call them fundamentals, but they're more like the building blocks of a project. So if you have these in place and if you structure them correctly, it's really important for the future of the project, and especially if you have a token, for the token to be actually useful, right? Because if you don't structure it correctly, especially for a lot of these early stage projects and ICOs, then there will be a lot of problems and you won't actually capture a lot of value from the idea with the token, for example. So that's definitely an important part for analyzing an early stage project, in my opinion. But there are obviously also the early stage projects that do not have their own token and just really want to build something, right? So that's nice as well. And my research and focus definitely is not focused on ICOs only, but also early stage projects that focused on building truly.
Yeah, no, I think that's fun. So yeah, that's what we were going to have a fun little interactive game here, and we're going to build our theoretical altcoin, the Daxia Podcast altcoin. You know, like what are some of the best practices you've seen? Because, you know, so we started talking to you after DevCon, and, you know, so we were sort of building a token of our own for the Oracle piece for Daxia, and just it led to a lot of interesting discussions about, you know, okay, what, you know, do you want a dev share? How do you sort of incentivize miners going forward? How do you incentivize users, or how do you incentivize the team past, you know, ICO date 101? You know, are there any projects out there that you think did it 100% right?
Well, but I think a good way you can answer that question, though, is like doing this sort of, I really like what you were saying, Nick, like having like this sort of role play, like, you know, if we really came to you and we're like, we're going to make our podcast coin, what are sort of the, you know, what are the basics that we need to start considering? You know, how would you lead us through that conversation?
So obviously the biggest problems we have right now is for decentralized applications, right? And if they want to have their own coin. So we were talking about a network, for example, because you were talking about proof of work, and that's obviously complete.
Did he freeze?
He did freeze.
So Robin is over there in Germany, and Germans are doing things to prevent us from talking to Robin.
German engineering my foot.
I know.
He might come back in a second. Let's see if he does. Because I really want to know how to make our shitcoin.
Really, really sorry, guys.
Oh, hey, he's back.
Okay,
I have no idea what just happened.
You click start video.
Yeah, wait a moment.
And we're back.
There he is.
Had a little bit of technical difficulties.
We were worried about you.
Yes.
Yeah, I'm really sorry. No idea what just happened.
We thought that was a total exit scam.
Yeah, that was the best way to structure an ICO, right? How do you structure an ICO? Just start it and then run. So
that was a illustrative demonstration.
Yeah. So basically, what I actually wanted to talk about is that you do need to make the differentiation between: do you actually want to start your own network, like you started talking about proof of stake for proof of work, for example, or proof of stake, or are you a decentralized application, right? Because I think a lot of problems we see in the space have to do, when it comes to structuring a token and the economics around it, have to do with the decentralized applications, because these don't make the real differentiation between stored value and medium of exchange, right? So they try to do both in one coin, which results in a lot of clash of interest, for example. So in that sense, I really like SpankChain, for example, because SpankChain, they do have that staking token, which incentivizes holding and can actually grasp a part of the network value. But then they also do have that stable coin, which obviously is way easier to use for their performers and also for the people that actually want to use the product, right? So I think that's...
So you like two different tokens then? Or like, well, this always goes like, why wouldn't you use Ether? Yeah,
that's the question, obviously, but that's for decentralized applications. I think that's the better way to structure it, because in the end, if you do have that token, if you do have the utility token, then nobody will ever use it, right? Because it's kind of weird to just being able to buy 2 units of your product, whatever you sell today, and then tomorrow only being able to buy like half of it because the value of your token decreased, especially if you price it in USD, right? So that's kind of problematic. And then when it comes to why don't you use Ether? I think for a lot of projects, the binding of the community is still kind of important, right? So you do have that own ecosystem. You don't rely on everything that's decided by Ether, and you obviously don't rely on the volatility of Ether, right? So you could obviously use another stable coin if you really want to integrate one, but then you always have that third-party dependency, right, and risk associated with that.
Well, I mean, would you say there's sort of the same third-party dependency if you use like a DAI as your stable coin, or some other USDC? I guess there's obviously third-party risks there, but
I think it depends on what you actually want to achieve. So one important thing for most of these projects, obviously, is they want to do an ICO, right? So they want to raise some kind of money in some way. But then, obviously, besides that, if you use DAI, it depends on: do you trust the whole system? Do you think that's the best way to go? Do you think that's the way to go for normal consumers, especially if you want to reach mass adoption? Isn't DAI a bit too complicated in that sense? And how can you make it easier? So if you do have your own stablecoin, for example, or your own network, which you build around the whole idea and your own tokens, then you can also have like your own user experience kind of, right? And especially for DAI, I think the user experience is quite bad if you want to create it yourself and really get going that way. So that makes it kind of hard. And I think a lot of people will still be questioning the underlying value of DAI, right? Obviously, the value hold quite well during the time, so it didn't really increase a lot in value, but I think that's important to consider as well. So maybe I think when it comes to mass consumers, the trust in a simple stablecoin is way easier achievable than, say, a decentralized stablecoin kind of, right?
Sure. Yeah, no, I mean, that's always like we always like to say, like, stable coins are basically just derivatives anyway. You have like a short ETH US dollar token, and that's like, it's just perpetual, and making it perpetual is always the giant hard piece that's put into it. But I guess back to designing the ICO and things like that.
So again, would the first question be, do you want to have an ICO? because that, if you're doing an ICO or not, doesn't that automatically sort of put you into the, you're making a utility token kind of thing?
To one extent, obviously, yeah, right. If you want to create your own network, then you have the decision: do I want to go on your own network with like proof of work and proof of stake, or any of these alternatives? Do I want to go with a utility token on another network, or do I have the option to maybe just start the network without an ICO, right?
Mm-hmm.
Take a look at Grin, for example. The interest is pretty high because there was no ICO, no pre-mine, and just like a real network start like Bitcoin actually had, right? And the interest in that is really high right now. It just started, but that's at least in the public perception a better way, in my opinion, also to structure and start a network than just raising money and then just see how it goes.
But then you sort of have to wonder, I'm not familiar with Grin as much, but how do you structure paying the team going forward, or like building kind of the decentralized foundation?
For example, a lot of projects go for dev share, right? So for example, 90% of the rewards actually go to the miners and 10% go to the team. And with that, you can pay for your own expenses, right? And the advantage of that is that you also do have skin in the game, because you don't have the whole bunch of money directly from the start, but you actually need to earn it in some way, because you need to build a proper network with real traction and design it properly as well. Because in the end, if it doesn't work out, then you won't get a lot of money from a dev share. So that's the incentivization from a team's perspective is way better in that sense than compared to an ICO where you get all the money up front and then people hope that you build something.
Yep. And plus the public perception thing that you alluded to, that like, especially right now, it's like something you can hang, your hat on if you say we've done no pre-mine or no ICO.
But I think, the thing I would argue sort of to push back against that would be like, is the dev share necessarily decentralized, and how do you distribute it? Because, like you have, like if you think about the Bitcoin ecosystem, okay, so it's supposed to be, all these people creating competing clients and, everyone sort of checking up on everyone else. If you have a dev share, like who does that go to? Does that go directly to, the Bitcoin core people who sort of run it at the moment? Or, in the case of like the Bitcoin Cash fork, like that would have been a giant debacle if there was like a 10% dev share. Right.
I think, yeah, definitely. I think Zcash is a pretty good example to take a look at, because Zcash, obviously it's way more centralized, right? So a dev share structure in general, I mean, but if you take a look at Zcash, for example, they pay a lot of money to the developers and a lot of money to the CEO, for example. And then you really need to question the structure of the dev share and whether it's really necessary to take that much money just for themselves. In the end, the answer probably is no. But for example, their goal is a portion of the dev share always goes towards a foundation, which then later will be used to fully make the transition towards a decentralized system. So that's kind of the Ethereum situation as well, kind of, right? We aren't fully decentralized, but at some point in the future, we want to transition towards that point. So some projects structured in that way as well, that they do actually have a balance of their own token, which they held off from the dev share for the future, which then can incentivize third-party developers or whatever to create a real decentralized network.
Sure. Well, I mean, like that's like sort of the big debate with Ether right now, right? You have, the Ethereum Foundation, which holds all this cash, but like they're not necessarily like hiring core developers to build out Constantinople or do anything. They're sort of relying on the community to do it. So, they give grants and things like that, but they want it to be more decentralized. But then I know they've gotten like some pushback because, okay, well, maybe you should just centralize it until we make the upgrades, because it's, sort of a shit show whenever you look at, upgrading the whole thing and it taking so long.
It's also a question in the end of what's more efficient, right? That's very important. That's, for example, a big debate when it comes to the on-chain, off-chain governance structures as well, when it comes to Ethereum, right? So the question of efficiency has to be taken into consideration as well, in my opinion. Is it more efficient, especially if you start a new network that isn't Bitcoin, but just like a completely new one? Is it more efficient to then try and get as many people on board to really build the whole network in a completely decentralized fashion? Or is it better to have the leading parties behind the project that actually do the groundwork, that actually put the work in that's needed at the beginning, and then afterwards try at least to scale out and make it a decentralized system? I think the efficiency is important to consider.
Yeah, because it's weird because like I guess, and I think regulations also sort of play a big role in this too. Like the SEC recently said like Ether was a security, but now they're sufficiently decentralized and now they're not a security. So like, do you want to if you have like, since Zcash has this dev share basically going to Zuku, does that like
make it a security?
Does that make it a security? I don't know.
Yeah, that's a good question. Yeah,
I know you're German based. Do you guys, whenever, now we can like lead into the next piece of issuing a token. Would you even touch US people or customers, or would you sort of recommend people just stay away?
Probably the safer way is to just stay away, right? Or only accept accredited investors, right? That's obviously safe. I don't see why you should take these risks nowadays, but that's also the reason why a lot of US projects or US investors focus so much on security tokens now, right? Because they can actually touch them, and that makes it a lot easier. As a European project, I would not focus on them, to be honest.
Yeah, I mean, where do you see, like, I guess, in the world, the demand coming from? And is it still there?
Yeah, I think it's definitely still there. We still see a lot of Asian projects push a high hard cap as well, right? And they do still raise a lot of money. And that kind of proves that they do have a completely different mindset, especially when it comes to the differentiation of security tokens and utility tokens. So that's very important in my opinion, and definitely an area or region to take a look at.
Yeah, no, definitely. And I guess that sort of goes like, how do you distribute these things? Like, you saw a giant, surge of airdrops. Like everyone thought like, oh, we just want to get our tokens into as many people's hands as possible. Is that like recommended still? Or is it sort of, now?
I don't think so, to be honest. I don't think it's a good idea right now. It never really was, because the projects really structured the airdrops in a way to either just smooth the community because their private server was sold out before they could actually contribute, right? Or just to gain awareness. And nowadays, I think it could be a really interesting solution for governance coins, right? But then there's also the question of volatility. But if you airdrop a lot of tokens to a lot of people that can then actually participate in your governance system, and that's a completely different thing in my opinion. Normally, most of these projects nowadays, I think it's not good anymore, and you should just not do it. But there's also always the way to do some kind of conditional airdrop, where you actually want the user to do something in order to get the airdrop. Or for example, just give out locked tokens, for example, that could be used as a discount when your product is actually live. I think these things are still nice and could still work in the future. But nowadays people just tend to sell these airdrops or just ignore them completely.
Waste a bunch of money on gas and clog up our network, which is...
Yeah, exactly. And then there's also the KYC question, right?
Yeah, definitely.
What about getting listed on an exchange for like a brand new, fresh coin? Like, what's the considerations and process and difficulties and challenges with that?
So the hardest part, in my opinion, is to actually take the market conditions into consideration, right? With the current market conditions, it doesn't bring a lot of value to the token actually to just list on Binance, for example, directly off the bat. Because what happens then is you normally have your market makers, for example, kick in as well. So you can actually hold a price level for some time. You have some proper liquidity, but then at one point it will drop either way. So the better way, in my opinion, is to start with a mid-sized exchange, for example, or a small exchange even. And then from a project's perspective, at least, let the people dump they want to dump, because most of them want to dump nowadays. We saw that with projects like LTO as well now. So these people dump, they are off the board. You don't need to consider them anymore. And then you can actually start building, then you can actually start scaling, meaning you can then actually start listing on bigger exchanges, get your market makers ready, and execute on your post-ICO strategy, because otherwise you just try to hold a price level that probably isn't sustainable, and you could end up wasting a lot of money.
But this is like the big question. So, most mid-size exchanges, or probably even some big ones, like they all just have these hefty listing fees. You have to basically just
$100,000 or something in Bitcoin, right? Or more?
More, most of the time, yeah.
Yeah, I don't know, but I know it's like, if you're a new project, that's a 100K is a decent chunk for a brand new coin. That's a
definitely
big barrier for a lot of people.
Like
100K won't. Sorry.
Yeah, I mean, like looking at Grin, for instance, like they're supposed to be decentralized. Like how do they get listed on exchanges? Like, what would you tell them? Like,
the strategy for them actually is, because they built up so much interest beforehand, is that a lot of small unknown exchanges started listing them. So the listing process itself is kind of hard because it's a new coin, right? So it's not like an ERC20 token that you can easily list. But a lot of small size exchanges actually really, really interested in listing the coin, which they did, because this way you get a lot of traction on your exchange, right? If you're one of the first exchanges to actually list it, then this is really beneficial to you as an exchange. And they aren't on these huge exchanges now. But in theory, if we take a look at the Binance listing from Ravencoin, for example, at least according to Binance, Ravencoin didn't pay any fee and it was for free. So that was also because they didn't do an ICO and they launched the honest way, kind of. So they didn't have to pay any listing fees. So it also depends a lot on the project itself. Did they do an ICO? If they did one, how high quality are them? And what kind of fee makes sense for this project, and how much interest is actually there in the community, right? So Binance, for example, could list Grin just because of the huge interest in that coin without even taking the listing fee, right?
So if you got a good project that you started, it would be good then to really focus on marketing and getting a lot of buzz around your coin, so that people that are like sort of the exchanges come to you and they want to capture that interest. Is that kind of the ideal storyline that could happen for our shitcoin that we're hypothetically building?
Yeah, you need to do it anyway, right? So normally what exchanges do, or some of them do, is that you need to prove yourself on other exchanges first from time to time. So if you don't get on the big exchanges first, you need to be on a smaller one, and you actually need to have solid volume. And then they might pay attention to you. So as a brand new project, the requirements can be a bit different though. As for example, CZ, yeah, he took a look at Ravencoin and he was like, yeah, I like the structure, I like the project, and obviously they didn't do an ICO, so they don't have those millions in their bank account, and we just want to list them. So that's also not necessarily due to hype, but also due to those building blocks and the fundamentals of how the project is structured from the start. But obviously the hype helps as well, because exchanges want to make as much money as possible, right? Mm-hmm. So that was the Grin advantage nowadays, because they build up so much hype. And there's a huge mining competition right now. Like everybody tries to mine Grin, and yeah, the price action is also very interesting. So that creates more hype even. But I think the network structure itself is important.
Yeah, I mean, I guess, are there any takeaways from, even like Grin or other projects you've seen on the building the hype piece? Like, what are best practices there? Like, do you want to sort of keep it fundamental? Because, some of the times you see people taking more of like the Zcash, like we're going to do more academic hyping, I guess you could say, or maybe even Cardano may have done that too.
That's what I was thinking.
Yeah. Whereas other ones, you can, maybe other less reputable coins may have gone the other routes where, you have more underground marketing on Reddit or just, chat rooms, forums, things like that. Like what do you think is the best way we can market our shitcoin?
Blasting memes.
Yes.
That definitely. I think it's really the best way to focus on building and have a more natural growth, right? Also for the long-term sustainability of the project, and especially also the long-term support of your token price, because you also don't want investors to be unhappy, right? A lot of these ICOs, they have that J-curve structure, right? They pump up at the beginning, the price goes really, really high, and then it just drops, and it keeps being low for such a long time. And then there's the question, can they actually deliver or not? But if we take a look at projects that went for that, let's call it organic path of financing your project and building, like Decred, for example, they didn't start out with an ICO either, but the price stayed flat for quite a long amount of time until they actually started releasing what they promised, right? So that's very important as well, in my opinion. And that was the point when exchange listings and the interest in the coin actually started piling up as well. So the fundamental progress is really, really important and can be a way more important factor, in my opinion, than just being able to pay 3 million or whatever for an exchange listing.
So what was Decred's story?
The developers invested their own money at the beginning in the project, and then they gave themselves some projects or some tokens at the beginning for their investment. And the same amount of tokens were actually airdropped to interested parties. So yeah, you just needed to sign up and then you got the tokens, right? But they didn't really have a lot of features built, so nothing really. So they started from scratch, and then they started building, and then the hybrid proof of work, proof of stake model came, and the high proof of stake returns, for example. And then it's recently the governance features, which really drove the interest to the project. So what drove the interest to the project in this case really is the fundamental progress and the things that you can actually do with the project and what the project achieves, and not an ICO or just spending a shit ton of money on marketing, because that's not what they did really.
Yeah, no, that's good. I mean, do you see a lot of these projects? I know one of the big, I guess, issues of maybe 2017, 2018 was sort of the VC model in all of this. You know, some of them still go and raise from VCs, and usually they're at sort of these giant discounts. Do you see projects sort of being punished for doing that? Or, you know, should you be doing a private sale ahead of time? I guess if you need to sort of kickstart your network, or do you get punished for it later?
We can take Zcash as another example in this case, because they did raise 1 million, I think it was, before actually launching their network, right? So that was the money that got them off the ground. And in return, those investors got a share of the dev share, which is really, really profitable for them, which is doable as a project in this case, if you want to structure it like this, and if you want to have an organic growth kind of system. But the main problem is that it's obviously less profitable for you as a project in the long run, because it would be better if you believe in your own project, if you keep as many tokens as possible for yourself, kind of, right? So if you really need that money from the beginning, then it's possible. But the main problems I have with those VCs nowadays, if we talk about most of the ICOs actually, then it's the community that was lost along the way, right? We take a look at how Digix was supported by the community and how it was actually hyped, and how a lot of people loved it just for them building something that they liked. That was their biggest support, not the money that they raised, but really the community that stood behind them and supported the project. And it was really, really lost in all the way, especially with all those VCs that just tried to make a quick buck.
So
not
wait,
all of them, obviously.
So what happened there? They just, you know, I'm not necessarily too familiar with Digix.
Yeah, so basically they did a normal old school token sale, right? So normal ICO, but it was the first really hyped ICO on Ethereum. So they gained a lot of traction through that and a lot of interest from the community because of that. And the support from the community was huge at that time. Everybody was loving Digix, kind of, at least most of the people that cared about ICOs, but they all supported the project and they were all looking forward to the launch of the project. Unfortunately, the launch of the project took such a long time that they lost the community along the way. But if they would have delivered on time, then the whole community, all those supporters, would have been potential customers of the product, right? So that's a huge asset for a project, in my opinion, because you can really take the community and make the whole community a customer to your own product if you do it properly. And that's something that like I said, was lost along the way because all the people just started caring about profits and not supporting the fundamental idea of a project. And these projects didn't pay or don't pay too much attention to a community anymore, like they used to be in the future, like they used to.
Yeah. So I guess you're just saying, like, if you VCs are more worried about, I guess, profit than
most of them. Yeah, we do have those good VCs, right?
Sure. Yeah. No, I guess that makes sense. Yeah, I guess community building is always sort of the important piece, and that was one of the original ideas behind the ICO in general, was that it was this decentralized private equity thing. So now you sort of have your community built as soon as you do your ICO, because the people who are going to buy your token are doing it because they want to use your token. But I'd say that narrative is now sort of lost. You know, nobody necessarily expects that the people buying your ICO are actually your customers, right?
Exactly. Yeah. But it could be really valuable to a project, right? Because what we see nowadays is some of those projects launch their product or their MVP and nobody's using it, right? The traction on these decentralized applications and the MVPs is so low that nobody cares about it. So yeah, in Digic's case, I can only imagine that if they would have launched sooner, then the hype would have been really, really high. And a lot of these people that actually supported the project would have used the project and the product as well, right?
Yeah. Do you think that's sort of what happened to Augur as well?
Yeah, definitely. Yeah.
I mean, they're sort of still hyped, but you know, everyone sort of complains about the UX and the user numbers. Is it sort of the problem with there are no users in the space, or they just don't want to use Augur because they sort of, you know, lost interest along the way?
I think it's both, kind of, right? Because most of the people that are actually interested in the project, they were interested in the project because they thought it could reach mass adoption to some sense. They compared it to, in Augur's case, they compared it to traditional prediction markets and what the product could actually look like in the future. And then it took quite a long time to launch as well, right? And then, like you said, the user experience isn't the best. So a lot of people that maybe tried it out once lost interest. And then also there's the chicken and egg problem, kind of, right? If nobody really uses the platform, then there's no liquidity really. And if there's no liquidity, then the user experience is really bad as well. So you need to start with one of these building blocks and really get traction on there as well, and not just build what they do and hope that someday users will come, which doesn't really work in my opinion.
Yeah, well, I mean, how do you sort of feel about, you know,
just real quick, in that case, there's a little bit of a burden on the community for Augur's example, or just any project like that. Like, the users want a return, but are they willing to take the steps to use the product and provide that user experience or that liquidity? And you know, and I wanted to ask you about, you know, the managing the expectations. It seems like there'd be a lot of pressure on a project that sort of developed this huge community that is, you know, super exciting and supportive, but then, you know, how do you handle the expectations on the time frame of delivering that? Is it these projects that are just being lazy, or is it that the community has just unrealistic expectations for new technology?
For me personally, transparency is a really important part. And there was one of the biggest problems with Digix, for example. I think it was DEFCON 2, where they said, we do have a huge announcement coming up. And everybody was expecting a product release, but they haven't really been transparent about their progress. So nobody knew will it be the product or not. And in the end, it wasn't their product release, which took a long time afterwards as well. But the biggest problem is, if those projects communicate their problems, their progress properly, then the expectations of the community would be adjusted properly as well, right? So that's, I think, if you don't communicate it, if you have a roadmap at the beginning and you know you can't stick to it due to whatever reasons, most of the time it's probably facing technical issues, right? Which is understandable because everything is so new. but then you just need to communicate it properly, which wasn't done by most of these projects. So people just kept on hoping.
Maybe they're just taking bad advice from their marketing staff, who are just like, we need to just tease a big announcement because this is going to get hype going. But inevitably, the real announcement falls flat compared to the rumors or expectations. I've seen that happen.
What's the value of hyping people up, giving them false expectations just for a few days, because afterwards it will drop anyway, right? So your token price will drop.
So is it ignorance or naivety on the because the answer is obvious, right? There is no real value for such a short-term hype cycle for a project, unless I'm not thinking, or there's something I'm not thinking about. So what happens, is it just naivety or ignorance or just whatever? What is it that these projects are thinking when they make those kind of blunders?
So there would obviously be the value to these hype cycles if your product is live, right? So that would be quite beneficial to your traction. Most of the time, it's probably to be nice to your investors and to meet their expectations as well. Which a lot of projects, they only do these hype things a really short amount of time post ICO, right? So normally you don't see projects making such announcements, except for Tron maybe, after like 1 year after the ICO or whatever. So they then just really focus on building and don't do that anymore. So I think it's also a question of timing and what do these projects want to accomplish? Do they potentially want to cash out some of their liquid reserve as well, so that they have more money, which is possible? There are a lot of factors that you need to take into consideration.
So then it's my naivety then, because obviously that hype cycle is super, super profitable, or it serves a real important purpose, in terms of greed, which is important too, in some ways. You got to feed the pig, as they say. Okay.
Yeah. But I guess back to my question, the one thing I was sort of wondering with getting users and sort of feeding their expectations, like, do you recommend projects like pay market makers in the space? Like once you get listed onto an exchange, because, or like even for Augur, for instance, do you think like they should be using some of that giant fund they have to sort of be paying market makers on their platform to provide liquidity?
I think in Augur's case, there's definitely value to paying market makers to provide liquidity on their platform. If we take a look at similar projects, not a prediction market per se, but we do have some gambling websites, for example, especially in the sector of esports, where gambling websites actually do have market makers, right, and provide liquidity. So users like to use those websites more because it's easier. I think that will be important, but I think it's also important for these projects to, at one point, step out of their development focus and start doing some business focused work as well, because a lot of these projects are focused on development, right? And they say we want to develop everything first because before we actually start getting the word out, which might be too late already, because the initial experience of a user is very important. If you use the product first and then on the first day, for example, and then it doesn't feel good, then will you use it again? Maybe like in half a year or 1 year, you'll be like, okay, let's give it another try. But you won't be a consistent user, right? So I definitely think there's value to these things.
Yeah, I definitely seen both sides of the spectrum where, I'm in the Telegram for some random small coin, and, people in the room are just crying out to the developers to like promote, just do, tweet something every once in a while, just like do the basics. And then you hear the developers they'll riff about, or they'll wax poetic about development and how much they're really focusing on the tech side. But I guess balance is key.
You need to pay attention to whether they have a product ready, obviously, right? Because if you market anything where you don't have a product, then that's wasted money, and the only thing that could happen is an increase in price or whatever. But if you do have a product ready, then the importance of that increases, in my opinion, and should be taken way more seriously by some projects.
Yeah, well, I mean, I think it sort of goes into what you said, like with the incentives. You know, if you just printed a bunch of tokens at the beginning, you have this now weird incentive to basically say like you want the token price to be as high as possible so you can sort of fund yourself continuously now. Whereas, you know, if you have a dev share, you're more focused on like the long-term growth. Like even if the token price is really low now, that's okay because you don't. I don't know. Maybe that doesn't make sense.
Yeah, that's why we saw or are seeing some of these alternative structures to ICOs, right? For example, we have those DICOs, which aren't really used that often, but
So
I saw
how
some
did those
projects
work?
right out. Basically, you just do several rounds of fundraising, right? And then with the option of investors actually getting their money back. So investors can actually vote on, do I want to get my money back or not? If, for example, some of the milestones in your roadmap aren't met.
Well,
So
this was Vitalik's idea, right?
yeah, I think so.
Yeah, I think he posted that on like ETH Research where,
Yeah.
I've never heard of this. This is just building in like a refund program into the ICO.
Kind of, and you don't raise all, you don't raise the whole amount of money at the beginning, but for example, just do a small round of 500K or whatever, and then you actually need to deliver. You actually need to have, let's say, a certain amount of users. You need to have a certain amount of features that are finished at a certain amount of time in the future. And if you don't reach those milestones, investors can vote, do I want to get my money back or not?
Sure. Yeah, no, it would be interesting because, you know, like I wonder if like Ethereum would have done that. Like I know Ethereum's doing great in terms of users, but you know, like did they meet all their milestones or would people be asking for their money back? And it would be like a nightmare scenario for people actually funding things. If, you know, your investors could take their money back at any point, I know building a business, that would be
Definitely.
like the worst case scenario.
Yeah, definitely. That's why a lot of projects don't go for it, right? And on top of that, you do have the risk of market conditions, which you can't control. So maybe you are a small project and you just continuously raise 500K and you want to raise 2 million in total or whatever. And then the third raise or whatever happens in the worst market conditions you can imagine, and then nobody contributes. Your project is going great. You met all your goals with a low amount of money, and basically you need to shut down. So that's the big risk, and that's why I think a lot of people don't really go for it. But then there are other structures like the reversible ICO, for example, right? I don't think any project actually went for it. But
so what is that?
Maybe.
That's like
that was proposed in during DEF CON. I don't remember it in detail, but there's also a refund option. You do raise the big amount of money that you want directly in the beginning, so you don't do various rounds. But as investors, you do have various refund options in the future, and the project doesn't get the whole amount of money directly from the start, but just after a certain amount of time.
They should make it so you have to be like an Amazon Prime member in order to have the refund option, the free returns, or something like that. You know, I'm just kidding, but I wonder if they limited that option to a certain tier of investor. You know, because it seems like a really big option to give away to people. And you were illustrating some key reasons why there's like probably more risk, way more risk than maybe is worth it to offer a refund like that. There has to be some sort of stipulation.
I think the biggest problems we have right now with projects is that they kind of need to raise the big amount of money directly from the start because it's so hard to structure a second token raise or whatever in the future. If we take a look at traditional structures, it's normal to have various raises, right? But it's not easy to do if you have a token that's already liquid, that's already trading, and that has a price. So I was thinking about that for some while. How do you structure it properly? It's really hard. You know.
I think the difference might be in like the goal, you know, like with Bitcoin, like you can think like there is like this sort of ideal, you know, like you would want to raise a bunch of money at the beginning to build it because hopefully like you can then just like let it go, and then you have this immutable thing that you never change. So like a dev share wouldn't necessarily make sense for Bitcoin since they all never want change. Um, whereas, like if you have a token like say Ethereum or something there where you say like we're always going to be upgrading it until, so it can always be the world's computer, that might make more sense for a dev share.
The development will continue, basically. So,
well, yeah, some projects don't necessarily want development to continue. You want to sort of be that immutable, digital gold, or I know on Ethereum, like especially if you're like a DAO or something like that, the whole goal is to kind of never have to update the code once it's deployed, right?
Yeah, the main problem I see with that is, would it work to have a second, let's not call it version of Bitcoin, but a second network that is actually structured and aims to achieve a similar thing than Bitcoin? Can you actually onboard the same amount of developers and people that are interested to make the whole network work? I think that's the biggest problem. And how do you do it? Because right now, Grin, for example, if we talk about that again, they did a good job. So we have people building wallets for it, for example. But how sustainable is that? And how will those features actually be built? Will they actually be built properly? And especially if you do it in a really, really completely decentralized way, then will you get enough traction? I think that's the point of efficiency that I mentioned earlier, right? So like you said, you need to take the values of the network and what the network wants to be into consideration as well, and then obviously adjust accordingly.
Yeah, I mean, but that's always community based. So, you can't necessarily control who your community is. Maybe someday Bitcoin will add in a dev share and we can just call it quits. So, I guess, coming up on the hour, any tokens you're super excited about?
Is this the lightning round, lightning shill round?
Yes.
Like any coins or ICOs or just anything?
Anything. Let's go projects too. If you.
Yeah, what projects are putting it together the right way?
Like I said, I think bank chain is really interesting. If you take a look at decentralized applications, I didn't invest in them, but I think it's a really interesting structure and something to keep on watching in the future as well. Especially because they do have some traction, right? They actually paid out a small amount of money to their performers, which wasn't a huge amount, but it's at least a start and pretty good in comparison to other projects. So especially also due to their token economics, that's something to keep on watching, in my opinion. Then obviously I'm personally still a big believer in Ethereum. Also, it's obviously hard to say whether ICOs or STOs or whatever will be the future, but I'm pretty sure that Ethereum will capture a huge amount of value from any of those. So that's still something that I really like. And then when it comes to more like underground projects or whatever, I like Sovereign. Sovereign is quite interesting, and I like Particle actually, but that's going to be a business challenge definitely for them. So they need to do a lot of business development and get users on board, which will be the biggest problem in my opinion.
Just kind of building up the community.
If they can do it properly, they are delayed for a long time as well. So the expectations weren't met. So that's one of the biggest problems as well. And a lot of investors actually lost interest because of that. So that's the same like Digix and Augur in the end, right?
Sure. I mean, they all just still have such high market caps, though, even in the bear market, compared to normal startups with 20 users or however many users some of these projects have, that their valuations are still astronomical. So do you think they have, I guess, farther down to go before, or, like at what point? Because the economics is different than like a normal startup valuation, because like in Augur's case, like you have sort of some staking sort of side tied to it. So like the whole security of the network is dependent on the value of your token sort of being high.
I honestly think most of these tokens are obviously still dependent on the price action of BTC. So if we see another bull market, they're just going to increase in price anyway, no matter whether their valuation is fair or not. But I think you definitely have a good point that you do need to take other aspects into consideration as well. There's also the question of, does the community behind these tokens, so the actual token holders, do they have value? Do they increase the valuation of the project? And then, like you said, mechanisms like staking or generally just getting returns or maybe burning features or whatever, they need to be taken into consideration as well. So I think a bit higher valuation than those really, really early startups is possible and kind of makes sense. But if we talk about a really high valuation for a project that hasn't achieved anything, then it's obviously crazily overvalued.
Yeah, cool.
I have a question. How's the? Are there any German-specific development that's going on that excites you? And what's the community like in Germany specifically?
I don't have a lot of German projects that I know that I'm really excited about, to be honest. But the community in Germany, at least in Berlin, is really good. So we do have Berlin, Hamburg, and Frankfurt, which are all very nice when it comes to crypto. Hamburg is more focused on these B2B businesses, whereas Berlin, for example, is more those early startups and just create something that's cool and see whether it works out or not. So you do have some interesting projects coming out of Berlin, and especially the community there is pretty big. So that's very nice.
Cool. So
Cool.
There's no major German projects to look out for.
Not any that I like. So,
You're gonna get in trouble. It's gonna...
He's like, they're my neighbors, man. I can't say anything.
yeah.
Your
Yeah, a
roommate's
lot of
like,
projects. Some of them are based in Germany, right? Just because it's convenient to work here. But most of them don't have their company in Germany. They prefer to go to Switzerland, right? Because the regulations are way better there, and it's way easier to actually start building your project, especially because you don't need all those licenses that you need in Germany.
Right. So strategically, it didn't behoove them to keep the company there.
Yeah, you can keep the company in Switzerland and just stay in Berlin, for example, right? That's what some projects do. But,
nice.
Yeah. Gotcha. Cool. It's like how in the US, a lot of companies are Delaware companies, but they've never been to Delaware. Like,
exactly.
Who goes to Delaware? Anyway, awesome. I mean, I think this was a really, really great thought experiment and conversation, and we really appreciate your time. And, we hope to have you on again, pretty soon as sort of 2019 develops. I'm sure there'll be much more to talk about.
Yeah, anywhere people can go. Any shout outs you want to give before we close it up?
Check out Daxia, right?
Yeah, definitely.
Thank you.
Good one.
We will check them out.
Awesome in the description.
Yeah.
Perfect.
Thanks for coming on, Robin.
Thanks for having me.
Yeah, talk to you soon.
All right. Later, man.
Bye.
So.